Okay, everybody, it's me, Gregory Mannarino, and here we go again. It is Tuesday, June 29th, 2021. How about this? Two new all-time record highs for this market today. The S&P 500 and the NASDAQ. It's unbelievable in the face of, yet again, several rounds of bad economic news. I explained to you all on Sunday we were going to get more bad economic news this week. Well, we got a whole bunch of it, and it was enough to push this market higher. Let's look at what's happening around us here. The inflation scare, and we have a lot to talk about with regard to that. The market just doesn't care anymore. It's all just, a non-event. Again, why? Because Fed Chair Powell said he doesn't care about inflation right now. He's more concerned about people getting vaccinated. The market took that as a green light that the Fed, forget about it, will not be doing anything with regard to lifting off, tapering, whatever. It ain't happening. And you all knew that because I told you right off the bat. And the market's now absorbing it, okay? So it just doesn't matter. Now, with that in mind, I want you to hear this. This is an incredible thing. So, Bank of America is warning. Are you ready? Sit down for this one. Sit down. You might have to do that. Is warning of transitory hyperinflation. Transitory hyperinflation. So, again, it goes back to, transitory. Let's quantify that. A year, 5 years, 10 years, because we got a lot more. And speaking of inflation here, transitory hyperinflation, this is what we found out today with regard to economic news. Home prices are rising at their fastest pace on record as inflation overall rises at its fastest pace ever. Okay, but the market don't care about that anymore. New record high. Rents are skyrocketing. In June, hit their highest price on record. Just lovely. The Fed's balance sheet today just crossed $8.1 trillion. The total U.S. national debt, dollar for dollar, not counting derivatives, $28.5 trillion, and the U.S. debt to GDP ratio is just over 127%. So again, as a percentage of GDP, our economy is cratering. It's cratering. There's no recovery whatsoever. Our economy is in free fall. The only thing that's doing great is the stock market. I don't understand how anyone could consider the fact that we are borrowing money into existence via the Federal Reserve at a pace that is absolutely staggering, watching our debt to GDP ratio hyper balloon, but we're doing great. You can't make this stuff up, people. You can't do it. It's completely impossible. Now, here's another piece of economic news that you might like here. So gasoline prices here in the United States just hit a 7-year high, and that is going to continue as well. Look, inflation is everywhere. According to Bank of America, it's transitory hyperinflation. I love that. How about you? I want to hear from you. What do you think about this whole narrative of this being transitory? What do they expect? I mean, honestly, what do we know has happened since the meltdown of 2008? Well, we have had debt balloon at a pace we have never seen before. Again, this is an illusion where we are. It's all inflating on a massive scale. So if the Federal Reserve is printing or creating all of these bills, trillions and trillions and trillions of dollars out of thin air, funneling them around the world to central banks around the world that are buying assets with dollars, what do they expect? Do they expect that this is really just going to miraculously disappear? And I'll tell you the insane part of this, the real insane part of it, we still have money velocity, or the rate at which cash is moving through our free fall economy, near historic lows. Could you imagine what this is going to be like once cash actually starts to move? And when it does, it's going to start in the debt market, like I've explained to you. All of this, everything we're seeing right now, is being built on the back of a debt market hyperbubble. The transitory hyperinflation, according to Bank of America, housing prices. Look at the correlation here. So we just found out, like I said, the Federal Reserve's balance sheet just crossed $8.1 trillion, the U.S. national debt $28.5 trillion. Do you notice a correlation between rising housing prices, the stock market, inflation with regard to what we're seeing here, and as well as our debt to GDP ratio? Do you see the correlation here? You really should, because as long as this mechanism goes on, again, the Fed's balance sheet hyperinflating, debt hyperinflating, debt to GDP ratio going out of control, as long as these mechanisms continue, well, what would you expect the stock market's going to do? Go lower? No, it's not going to go lower. It's going to continue to go higher and be more and more twisted and more distorted from reality. And that's what I think, honestly, a lot of people are missing out here. Again, going back to those people out here calling market tops several weeks ago, I brought this up. There was a guy out on Greg Hunter's show. Oh, wait, we hit a top and we've hit record high since that point. Ignore these people. Okay, they have no clue at all of what they are talking about when it comes to the market or the economy. Okay, they're dangerous. When Greg brings a guy like that out on his show, realize that you're listening to someone who has no idea at all of what they are talking about. They don't understand the dynamics. Anybody that is calling for an imminent market crash, or anybody trying to pick market tops is an imbecile. Anybody trying to pick market bottoms is an imbecile. You can't do these things, okay? Tops and bottoms, good. You think you're good enough to do that? No, you're not. Nobody is, okay? We trade trends. Now let's move forward here. So we understand the market here today hit new record highs with regards to the NASDAQ and the S&P 500. Gold and silver today fell under pressure. 10-year yield stable. Dollar put on a gain, which despite the fact that we hit new record highs in the market, that stronger dollar muted gains. Okay, the market was up much higher earlier today. That dollar is weighing on the market. Why do you think, for example, President Trump was talking about how he wants a weaker dollar? All he was really saying is he wants the stock market higher. A weaker dollar in no way, shape, or form helps the average person trying to get by, but you're not supposed to know that either. And again, crude oil did catch a bid today. So people, let's just summarize what's going on around us. We have, we are right now in, I guess, the early stages of a transitory hyperinflationary event, according to Bank of America. And again, transitory. They imagine it's just going to disappear, all of a sudden just go away. So all these extra bills that are now starting to chase the same amount of goods, they're just going to stop doing that. You understand, look, once that floodgate is opened, and it is open now, and those extra bills start chasing the same amount of goods, despite the fact that money velocity is at historic lows, near historic lows, you can't stop it. You can't stop it. Even if the Federal Reserve were to start raising rates aggressively, it won't stop it. But you're not supposed to know that either. See these things I'm telling you? You're not supposed to know these things. You won't hear this from any mainstream channel out there. And the market, frankly, doesn't give a damn at all. The market realizes that any kind of a rate hike or a taper is years and years away. And the bad economic news like we got today, I mean, you can't make this stuff up. Home prices rising at the fastest pace on record. Inflation spiking at its fastest pace ever. Rents are skyrocketing. The Federal Reserve's balance sheet is hyper-ballooning. Debt, national debt out of control. Debt to GDP ratio proving that our economy is contracting. We're cratering. And all of this is enough to push the stock market higher. Let me ask you, do you think it would be possible for you to make this stuff up? If you actually tried, if you sat down and just tried to make this stuff up, could you do it? I don't think so. I don't think anybody could. All right, people, look, very important video. I covered a lot here, a major day with regard to news, all bad. It couldn't be worse, but it's enough to push the stock market higher. So the phenomenon here is going to continue. The worse the economic news gets, and even the higher the inflation gets at this point, the market's going up with it. As long as the Federal Reserve's balance sheet continues to balloon, debt continues to balloon, and there's no end in sight there. And a debt to GDP ratio, you haven't seen anything yet. You think 127% is bad? We're going to be at 150 to 200 very soon. And the market's going to just love it. All right, I'm out here. Love you a lot. Please share the video. And I'll see you tomorrow morning.